All right, okay, good evening, everyone. Okay, we'll get started for today's session over here. And of course, as usual, what we're gonna do is to run through the market with you guys, okay, and update you some of the opportunities I'm looking at, so that you can keep updated of the market from a week-to-week basis. Okay. Now, last week we do have the NFP coming in. Okay, and of course, post NFP, we did see the dollar actually weakens across board, and over the weekend we have a major news as well, where Israel is getting potentially into a war, right? So that kind of sent the gold prices actually a little bit higher over the weekend. We did see a gap up as well. Right? So yeah, those are quick ones that you probably want to be aware of. So NFP data actually came in where NFP was better than expected, but the average hourly earning and the unemployment rate is actually worse than the anticipated, right? And that's actually pretty much in line with my personal um, view over here, because high interest rate environment is definitely going to have an impact in the economy, and going into like next year, there's a very good chance we may see the economy suffer, and of course with that, that's where we're likely gonna see the Fed eventually cut rates as well. Okay, so we are in a little bit of a transition from inflationary pressure, where we're focusing on inflation, towards potentially going into like late this year, next year, a little bit more focused into how well the economy is doing. Okay, so as you're tracking on all this performance and economic data, do be aware of that transition as well. Okay, now today it's obviously quite a bit of like holiday across the market, so don't expect today's movement to be truly genuine. Again, we always say Monday market tends to be doing what it wants, and then the official kind of like quote unquote right official move likely gonna start maybe after Tuesday. Okay, so today is Monday, and of course we have bank holiday, so be aware of it. I think this week the most important and definitely data that you want to focus is gonna be the US CPI year on year. Okay, uh, and that will be the primary focus for the week, right? Generally, nothing much other than that. Okay, so if you're looking at like news trade opportunity, then this week here will be on Thursday 8:30. You can actually use the news trade strategy to trade off the dollar CPI year on year data. Some of our swing trade potentially is going to line up quite nicely on Thursday as well. We'll be using that as a potential catalyst to get involved in some of the trades. Okay, so we'll jump into that in a while. Okay, so let's take a look at the technical perspective of things. To start off, of course, we have the dollar index over here. So last Friday, post NFP, we did see the dollar actually sell off. Okay, which is something that pretty much are prepared for. Um, we've always been. I mean, for the past 2 weeks, we have been covering. Be a little bit cautious in the buy, but what we want to do is more of like focus on the sell side of things until we get a valid setup. Of course, we don't jump into the trade just because we would like to sell. So right now, going into this week, it seems like we may get an opportunity to have a valid setup. We did get our first drop here, but of course that doesn't necessarily mean we're going to sell it, because you can see in the past, we get a push down, but if you don't have a corrective structure, you don't sell it, right? So same thing, you can't get a push down. We want to see a corrective structure before we commit to the sell trade. If you don't have that, obviously you're not going to just jump into the trade and sell it, right? So over here, ideally, this is going to build up slowly going into Thursday. And of course, if you can get a correction by Thursday on CPI data release, we can actually combine the news trade catalyst for the swing trade direction as well. Right. So I'm actually continue to be bearish bias on the dollar itself, and of course that would then mean on the euro dollar we're looking at potential buy. Today market it came down to the 50% mark, but again, Monday market usually is not that genuine. So this may actually just goes back up, come back down, and again, we want to see a clear three-wave structure. Combine it with potential catalyst on dollar CPI on Thursday. Okay, that will be a nice decent trade to the upside. Similar here on the pound. Okay, so likely you're gonna see some kind of a corrective structure building into CPI, then that would be a very nice little trade. Okay, so euro dollar and pound dollar, focus on the upside. Okay, wait off the corrective structure to develop. Likelihood it's gonna come to us somewhere closer to its Thursday, I would say, which lines in perfectly with the news as a catalyst. Perhaps dollar continue weaken, CPI data is not as high, then we'll get a nice little trade up. Okay, Aussie dollar as well. Okay, so this tree is kind of like similar: euro dollar, pound dollar, Aussie dollar. So be a little bit patient. Wait until Thursday. Okay, now dollar CAD is where I think last week. Okay, last week we actually took this sell. For those of you who are in this trade, just manage it along the way. I think this here will probably need to get updated, but overall I think we'll see more downside. Okay, now last week we kind of get a break here. Somewhere around 1.37 area. Again, why we're looking at that trade, I think by now, if you've been following us for some time, I think you know why, right? The reason behind that is we have a crawl pattern, okay? We have potentially a 5-wave move that is completed in yellow. And the whole idea over here is just basically trade a breakout, right? Combined with last Friday potential catalyst for NFP as well as the Canadian side of things, right? But of course, what is also contributing to the dollar CAD pair falling is, of course, crude oil prices has been going higher. Just now I did mention briefly, Israel potentially going into war, and oftentimes when there's such event, oil prices will go up, right? Because during a wartime, oil is one of the most precious commodity, and if oil prices goes up, market correlation, Canadian would likely strengthen. Couple it with dollar weakness, right? So dollar CAD is clearly falling at the moment. Okay, so dollar CAD here, if you have a trade, we have shift stops to break even. If this is likely going to keep falling like that, maybe by tomorrow morning we have the chance to actually even shift stops to protect our profit, to trail it. If you're not in this trade yet, okay, don't rush in. I would say you might want to wait for a pullback, right? So if this were to drop a little bit more, then let it complete the drop first. Okay, if this is gonna drop a little bit more, wait until you get a corrective setup before you commit to another sell. Okay, unless you already have a breakout, then just manage it along the way. How far can this likely drop? If you're a little bit more conservative, of course you can pull fibs from the low to the high. That would give us somewhere around that 50% mark, putting us at 1.3580. If that level breaks impulsively, of course, that opens up a lot of downside, right? Because you can see where dollar Canadian is right now. Okay, from a large time frame perspective, it has a possibility to retest the low at wave 4 here at 3380. Right? So our sell is definitely going to be holding on to it a little while, right? We'll profit, protect it, trail it, and see how far it can take us. Okay, so dollar CAD is a very, very decent trade from last week going into now. Dollar yen here, overall I'm a little bit bullish, but the yen pairs is a little bit tricky, right? I'm not too keen in focusing on a buy trade on dollar yen, even though if let's say the price suggests that there's more upside. I'll be more keen to maybe come back on the dollar yen closer towards the end of the year, going into next year for potential sell. Okay, there's a good chance the yen would strengthen going into next year. I mean, right now I don't really see any other potential catalyst or news that can drive the dollar, the yen strength. But of course, we do have potentially Israel going into a full-fledged war. I don't know how that's going to develop. But if that side of things is gonna be worsened, then of course we'll be going into a risk-off environment. Then yen here may strengthen quite a bit. Okay. Yeah. So my personal take is I would not be focusing too much on the yen pairs for this week. Okay. I mean, we are not short of opportunities anyway. I would not want to spend too much time on the yen pairs itself. Not only the dollar yen, but generally the yen. Okay. Yeah, so that's my take on the yen pairs, and of course we have gold. You can see gold here actually push up quite a bit. Two factors that primarily contributed to that, of course, is dollar weakness from Friday, and then of course risk of environment pushed the gold prices higher. So no question here, directional bias definitely upside after an impulsive move like that. But of course, if you don't have a trend, I mean, last week we kind of took the breakout as well. Okay, pretty nice little trade. Shift stops to break even, very easy to manage as well because of the impulse move. Okay, so if you don't have any buy yet, then just simply wait for the pullback correctively. Okay, then that will give you a setup to take it to the upside. My take here is the upside potential on gold is pretty huge, right? If you take a look at the daily structure perspective, if this is indeed the bottom at 1809, then that opens up a lot of upside possibility. Long term, fundamental, macro, gold, you're definitely interested in the upside, right? No, I mean, long term, there's no reason to be selling on gold, okay? So if you're looking at this asset, okay, you can potentially look at it from short term, mid term to long term. I think the direction here is definitely focusing on the upside. Okay, and all you need to really do is just wait for the setup to come to you, right? So this was a setup for us last week, breakout trade after a crawl. Shift stops to break even after the impulsive move. If you don't have the trade yet, wait for a corrective pullback. That's also another setup to go long. Okay, simple stuff over here. As long as you are clear of your setup that you're looking for, just wait for it to come to you. Okay, so gold is definitely there. Crude oil. Okay, so you can see this V shape. Essentially, it's really because of the news environment. In terms of like Israel side of things contributing to that. So I think this week in the short term, okay, if you can get a corrective structure here, there's a good chance we'll see one more pushback up. Okay, so crude oil this week, you can look out for bullishness. Okay. S&P as well, we kind of cover, right? Last week, Monday, we even talk about, not looking really to sell it anymore. With this, three-wave corrective structure potentially done. Sorry, not corrective, but basically three-wave structure potentially done. We have divergences since last week, so naturally upside, right? So for now, wait for the pullback. Okay, if you can get a pullback, then obviously you'll be looking for upside. So quite a bit of setup that you want to pay attention to this week. Okay. Yen pairs, we'll skip that. Euro pound, I think short term we may get a little bit downside. But I always highlight this pair is obviously not the easiest to trade. Okay. By itself, it's very, very choppy. So short term, there might be a good possibility we're going to see a little bit more downside towards 8612, 8593 area. Okay, and we may see some reaction to the upside from there on. Not a fan of this, but basically those of you who are interested, then keep an eye on the key area for potential buy trade opportunity. Okay, pound Australia is something that I'll be paying a little bit more attention this week as well. So since the impulsive pushback up, we spent a couple of days last week to do this corrective structure. If this week we can get one more push down, that will complete a three-wave structure. Ideally, we have a 1 hour crawl here that will give us a buy trade. Right, of course, can this go higher than that? Potentially, yes. But to me, I think if you can buy here and take profit there, decent trade, you want to, at least take some profit off, see how the market is going to develop from there. If you can get a continuation, great. If not, you at least have some partial profits. If it comes back down, throw your stops, get out. Okay. So pound odd, definitely interesting to watch as well. Okay, again, we have came down quite a bit, right? So potentially something like that. So this may just be a decent pullback, right? So short-term upside, right? This is definitely something that you may just take it within the week, or maybe going into like, let's say early next week, and then that's it. Okay. So my focus is a little bit on a major pair. Probably need to give it a couple of days going into Thursday CPI. Dollar Canadian, definitely that. Gold, definitely that. Okay, I mean, dollar Canadian and gold I already have trades in it, just basically monitoring and managing it. Pound Australia here, we're looking at a potential trade this week. Okay, and last but not least, Bitcoin. Short term, I think we're gonna see a little bit more downside, going towards 26940, 26465. That zone is definitely a potential buy trade opportunity, right? So if this comes down and forms a crawl here, that's great. Okay, we'll look for Bitcoin buy. But short term, be patient. This may come down a little bit more. Right. So generally, those are some of the things, right, that I'm looking out and paying closer attention to. Okay. Other than that, if you're looking at some of the indices, let me just do a very quick scan and see if there's anything that pops up. Okay. Doesn't seem to have much of the things here. Yeah, I think index this week, other than S&P, generally nothing that stands out. Okay, dollar Swiss franc over here, probably not the best of all things, but if you can get a corrective move, you may want to look for the downside. Right? Something like that. I mean, it's too early to pull fits, right? Because this is still developing in the low. Until you get an early sign of a bounce, then you can pull in your fit. That makes a little bit more sense, right? But if it's too early, you don't want to pull your fips yet, because you probably just need to keep adjusting that, right? Yeah. So I think generally those are the things. If you're looking at some of the crosses, I think Euro Odd may give you something. Right, so Euro Odd, we do have potentially a simple corrective structure here setting up. Okay, for those of you into crosses like Euro Odd, let me get something like that. Which is quite similar, to be honest, with Pound Odd, right? Just a slight difference in terms of how the pattern is playing out. But they are both corrective in nature, right? The pattern development. So yeah, if Euro Odd here, you can get a corrective pullback towards like 1.6490, 1.6460, then that will be a buy trade opportunity, right? So some of the crosses, Euro Cat, okay, you can wait a little bit while yeah, the rest of it probably nothing much. Okay. Good. So those are some of the opportunities. I think Euro Odd, Pound Odd is the two clearest cross pair that you can pay a little bit more attention to, other than some of the other majors that we cover. Okay, yeah, good. Okay, any questions? Okay, any questions that you guys have? See one question over here. What is a sign of intervention? What is the sign of confirmation that caused the fall of JPY? Yeah, if you're talking about like this little spike that happened sometime last week, there wasn't much of a news, right? So probably it's just it hits 50. Right, it hits a strong psychological number around 150, and perhaps there's a lot of people putting in their sell orders, and we can't see that spike down. Okay, but from a fundamental sentiment perspective, that's really Okay, so if you're referring to this spike, basically, yeah, that's the only explanation we have. Okay, strong psychological number around 150, that causes that drop. Okay, yeah. Dow Jones, we did see a little bit of a reaction here, but ideally we want to see a bit more upside, impulsive, right? And then after that, a corrective pullback before we commit to the trade. Okay, so yeah, you want to see a little bit more of a V, then a correction, then upside. Okay, so we kind of potentially completed this 3-wave down, right? We have the fit area here as well. Okay, so definitely upside, right? It's more of just waiting for the setup to develop and then we can commit to that buy trade. NASDAQ. Okay, NASDAQ is something you want to probably be a little bit cautious because this development here seems overall corrective in nature for now. Okay, and therefore that opens up a possibility where this may come back down before that push. Okay, gonna complete the bigger structure or something like that. Yeah, so from this perspective, you can even see here potentially 1, 2, 3, 4, 5. Then only that push out, right? So this becomes an ABC structure. So NASDAQ is a little bit not clear in terms of the outside, but S&P and Dow Jones, right? You just wait for that impulse correction. But this one here, you just want to be careful. I mean, if this gives you a crawl here, you may even consider to take a sell trade down, right? To this level. Okay, so NASDAQ is a little bit different compared to S&P and Dow Jones, right? Anyway, NASDAQ is more of like tech side of things, right? Okay, yeah, so I hope that clarifies the 3 index. Okay, question here, should we take a diagonal trade after 1, 2, 3, 4 setup only? For diagonal, usually I want to wait for... Okay, if I were to draw it out, right? If this is going to develop into a diagonal, it should look something like that. Okay, so you should, for a sell, ideally you should see like 3 times it tag the top of it. It starts to show sign of coming down. Okay, so you know that, okay, that's potentially the top. Usually we use a simple breakout trade. Okay, so that's a sell trade diagonal. Ideally, you want to see 3 tops at the top, trade using a breakout technique. Okay. Now, if it's a move to the downside, you can see here potentially 1, 2, 3, right? Sometimes it can give you a little bit more, but basically you're just using a breakout trade. Okay, which is perfectly fine even if it does this, right? Because you are having a breakout trade. You obviously will be shifting a little bit lower, right? I mean, let me just go back a little bit while. Okay, so at this point in time, how your crawl or diagonal would likely look, it's something like that, right? I mean, looking at this, you probably also expect one more drop anyway, right? So you can see here 1, 2, and potentially 3. So what you do is you know, as you continue to monitor this, you don't put your order too early, right? I mean, if you're looking at that point in time, your breakout, okay, will likely be somewhere around there, right? Because as this continue to develop, that would be probably your bottom. You're waiting for either something like that and then the break, okay, or you wait for this to go up a little bit and then do a consolidation. So your breakout point is somewhere there, right? And then as the market continues to develop, right, it did not really break through, and then you see a dip, and then of course you won't know on this low until you get something like that, right? You get something like that, then you know, okay, that would probably be the low. Where is your breakout point by then? You probably shift this here, okay? Yeah, so when that happens, basically that's your breakout point, and you just basically play it out, and yeah, so it breaks out and that's your trade, right? Okay, yeah, yeah, so that's on the kind of like ideas on the entry aspect. Okay. Yeah, for correction itself, we always wait for a three-wave move. Let me find. Okay. Okay, let me see if I can find a three-wave move, right? Okay, if you take a look like examples, right? Let me go back to the follow. Okay, this is a very nice little three-wave move. 1, 2, 3, right? So you get an impulse, you get a correction. Okay, oftentimes I like to wait for three-wave move and then we'll only take the sell after that. Okay, so if you kind of flip that, and you take a look at this here, right? When we mean that, when I mentioned, you want to wait for at least a correction, you always want to wait for something like that, right? Of course, you flip this because this is the downside. If you want upside, you just mirror it opposite. That's the upside, right? So usually for correction, you always want to wait for a three-wave move. If it's a diagonal internally, it's often a five-wave move. Okay. Yen pairs, just avoid it. I think yen pairs are just not worth looking at right now. Most of the yen pairs is not like in the most ideal trading environment, right? Yeah, you probably need to be very patient with it, and I don't think this week you're gonna get anything meaningful out of the yen pairs, right? So don't waste your resources, don't waste your focus and energy on things that probably you're not gonna get anything, right? You would rather want to focus on things that might give you something, so you want to spend a little bit more time onto that and focus on that because if you have too many things that you're looking into, sometimes you can get distracted. Okay, so yeah, the yen pairs, my suggestion is just avoid it for the week. Okay, at least according to my analysis and the way I trade now. Yeah, Aussie Canadian. Not the cleanest chart of all right now. We may get maybe this to come down a little bit more, forms a crawl here. We may then get a buy because then that will give you that three-wave structure, right? Okay. So yeah, Aussie cat, something like that. Okay, 1, 2, 3, crawl. You can look for the buy. Yeah, if that's in your watch list, right? I mean, I don't look at Aussie cat, but if you're into that, then yeah, this week you just focus and see if you can get a crawl closer towards the bottom of this low, then that would be a potential buy trade. Okay, trailing stop is actually a very simple thing. Okay, like for example, okay, if I'll play back this a little bit, right? So last Friday, we're looking at a breakout. Okay, of course your stop will be at a recent high, right? So when the market starts to develop and we get a break, obviously you don't immediately go and trail and shift your stop, right? You want to wait for a pretty impulsive move, okay? Something like that, right? So for me, at that point in time when I see something like this, we get an impulsive move here, okay? So what I would do is first thing do is to shift stops to break even, right? Kind of remove your entire risk on this trade. And then you let the trade run, right? You don't want to kind of trail it candle by candle. But what you want to see is something where the market does a little bit of a consolidation and it drops again. Then you have some layer of idea in terms of like, okay, I have my stop at break even with this drop here with market price now there. I can consider to shift my stops to protect maybe at the bottom here or even here, right? Depending on how aggressive you are. Okay, there's no like model answer to that. But the thing is, you don't want to be trailing too aggressively because sometimes if you trail too aggressively, you're gonna get out at break even and then the trade continue go in your direction and then you miss out the profit, right? So same thing here in gold. Okay, so kind of see that we get an impulsive break. So the first thing to do is shift stops to break even. We don't want to trail it yet because the market hasn't really formed a consolidation and make another move, right? But if let's say the market decides to do a consolidation, it may not come down so low and then it decides to break above. then, you know, depending on how impulsive that is, we may shift stops to the recent low here or even the high here, right? Then we'll throw and protect it. And of course, if this continue to do something like that and keep going, then we'll continue to throw it to the recent low or even the recent high. Okay, so it's not complicated, but it of course takes a little bit of experience in that, right? Okay, MR here asks, chef pairs just going to the downside for months. Let me see. Not all. Okay, I mean, like pound franc is basically ranging since like late last year. I'm not a fan of chef pairs, right? To be honest, I just think that CHF isn't much of a volatility in a way. Okay, Swiss franc doesn't have a lot of news that's being publicized as well. So yeah, I mean, not all pairs are basically really trending. Okay, some of it has transit into a range. Like cat franc here is obviously a range since like earlier part of the year. I mean, if you enjoy trading range bound environment, right, then that becomes a good opportunity as well. I mean, obviously you want to wait for a correction first, right, and then you can look for a sell. So you're basically trading, you know, from top you expect this to come down, from the bottom you expect this to go up, right? So near the bottom you don't go and sell it anymore, you'll be focusing on the reversal. Near the top you don't go and buy it anymore, you're going to focus on the reversal, right? Okay, so some of these chef pairs are basically range bound. Yeah, not a fan of it. Even dollar franc is really not the clearest of all. Okay, we can't get this push here. We can't expect a bit of a pullback after that, you know, massive run. Yeah, so yeah, I mean, if you want to sell the dollar franc, right, which means that you're likely looking at dollar weakness, my take is focus on something else, like maybe dollar CAD would be a better focus on the sell, right? Or even maybe, you know, buying up the pound dollar if you get a setup, or even buying up the Aussie dollar if you get a setup, would be way better than like dollar franc. Okay, that's my personal take. Is it a bullish divergence on euro pound? Not really. Okay. We don't have a divergence now. Okay, because if you take a look clearly, this is actually a little bit to the upside, right? And then your RSI is also to the upside. There's no divergence. Okay, but if this comes down, okay, and this doesn't break that previous low, okay, by somehow this does something like that, then yes, that's a divergence. Okay. Yeah, so for now we don't have it, but if this comes down, breaking that low, but RSI is not able to break this low, okay, which means RSI is going a little bit higher, then that's a divergence. But until then, we don't have one divergence. We don't have a divergence yet. Okay, so I hope that is clear. Okay. Good. Everyone is so good. So far, so good. Okay, quick one. Let me bring up. Okay. To close off today's session over here. Okay. Just very quick one to update you on an upcoming event. That's happening in Penang. Okay. So this is actually the PAM account, right? So for those of you not familiar with PAM, is basically quite similar to copy trade, where you're able to then tag, you know, your personal account, follow the trades that we're taking in the master account itself, right? So this account, we started it back in May this year, okay, and so far it has been pretty decent, right? Last month we end off with 3.48 return. October, as of now, we are basically still early part of the month. Okay, so we'll see how it goes. But basically, this is how the performance has been since we launched this to the public. Okay, now if you want to understand a little bit more about PAM, how you can actually potentially, if you after you understand and you want to tag your account and follow the trades we take over here in this particular account, we do have an upcoming sharing event in Penang. Okay, so for those of you who are based in Penang, and of course, by Penang we mean both Penang Island as well as the Bukit Mertajam site. We'll be having an sharing on this on the 21st of October. Okay, so let me just very quickly post the dates up here so that you guys can see. Okay, so it'll be 21st of October. It'll be on a Saturday. Okay, the 21st is on a Saturday. So in the morning, 10:30 a.m., it will be at Iconic Hotel. Okay, so that's at Bukit Mertajam area. And then in the afternoon at 3:30 p.m., that will be at Masco Penang, right? That will be in the island side. So if you're based in Penang, and you would like to join us for this event workshop to understand a little bit more about PAM, how you can actually copy trade and things like that, tag along the trades that we do. Do RSVP with the team. Okay, so again, if you're on Zoom now, just click on the link on the WhatsApp. If you're watching now on the YouTube stream, just go to the description box below this video. We do have the WhatsApp link as well. Click onto it. It'll direct you to WhatsApp, and basically the number on that is the team's number, right? You just need to tell them, oh, I'm interested in this event. Help me to RSVP. Okay, it's free, so as long as you're interested, you can join in. Okay, we'll be concurrently running that on online as well. Okay, which means if you are not based in Penang or Bukit Mertajam, maybe you're somewhere else, you are able to join us as well. But of course, you'll be joining us via Zoom. Okay, so you need the link, so you also need to RSVP, right? So that's a quick update on the events that we have. Okay. Yeah, so that's all from me for today's session over here. All the best to your training this week. Okay, and we'll see you guys next week as usual. Okay, that's all from me. All the best. See you guys. Bye bye.